Ladies and gentlemen, welcome to Creating Tailwinds podcast by Flight Path Financial with your hosts, John Urbick and Jared Adams. Join us today as we discuss the power of infinite banking. And here we go.
Well, greetings, John. Hello again.
Jared, how are you? You are up in Minnesota.
We're up there in Minnesota. Yeah.
All right.
It's cold as can be up here. The missus showed up and she couldn't understand how people even live up here with all this cold. I didn't think it was that bad.
I figured they were going to haul you off into law enforcement up there these days. Gosh, how you holding up?
Doing good. And we're making it work. I'm up here to investigate some possible investment properties. I hear there's some real good daycares and some other places up here that were formerly run by a different persuasion, of which there's some awesome investment opportunities now.
Oh my gosh, I hear the ROR on those things is phenomenal. No money down. Oh my gosh.
You can get the government to pay all the money. It's great ROR.
And put me in. Throw me in that briar patch.
That's right.
Oh my gosh.
Well, what have we got in store here for the new year? I know some of our, our generic mindset here is just kind of reevaluating what the new year brings, getting excited for 2026. Obviously, a lot of new changes when the new year starts, but good things ahead and looking up. I'm excited for what the year's going to bring.
I'm very optimistic about 2026. I just think when you have so many changes, so many dramatic things happening, that's going to create a lot of opportunities. And opportunities are met when you have the capital to meet them. And I think that we are uniquely positioned to help people. And we had a discussion about how do you implement IBC? What does that look like? Where does the rubber meet the road?
Yes.
And I thought it was an excellent idea of yours to talk about some of those things.
Sure.
I mean, everybody has
maybe just a little groundwork to help us walk into the new year. One of the things that really helped me just kind of recenter what the goal is for the year for 2026 was just the reminder that we finance everything. I mean, it's easy to just say, oh, I'm going to just pay cash for that. Well, when you pay cash for that, your finance cost is the interest you've given up that you could have received elsewhere. So everybody understands real easy what it looks like if you pay the bank their financing fees.
Right.
But it's not as well understood that if you pay cash, there is a cost to finance. So the reminder is we finance everything. Every purchase we make is financed. It's either done through a loan through a bank or another commercial lender or some other instrument, or it's done by paying cash and giving up the interest you could have made by holding on to that. So that was a good reminder for the year on what that looks like in terms of a mindset.
And on your point about cash, it's a double-edged sword. Two parts of that people don't really consider. On the cash component, when people want to be conservative and responsible, and that's wonderful, and they're going to pay cash, they're not going to carry the debt. It's wonderful. But there's two parts, of course. One is the future interest on the money that you lose, just putting them into a safe money position, put them into T-bills getting 4%. Adds up to quite a lot of money over time. You look at a 10-year time horizon, it's thousands and thousands of dollars to people. The other part of that equation is not only are you giving up the future earnings power on that money every year, our purchasing power is slipping from inflation because they're printing more money. And so you've got this divergence. Both of them are working against us. And so you and I try to show people, says, well, what can we do about this?
Yeah, that's spot on. I mean, it's a great description of kind of that double-edged sword that you've got up ahead of you, of which we don't really have a whole lot of control over that. I can't control whether or not the Fed prints more money. I can't control what the T-bill rate is, but I can control the finances and the income that comes into my household and where that is stored and where I place my warehouse of wealth to know that I have access to it. Our first podcast for the year was about liquidity. I mean, it's spot on to follow up with that to say, where is your liquidity? Where are you storing your warehouse of wealth?
Well, what do you think? I put together a little PowerPoint. Why don't I bring that up and
Sure.
You can kind of walk us through it? Does that sound okay?
Yeah, that sounds great.
All right. So this is one of the points that we wanted to share with people, that our vision runs parallel with some of the smartest people we know on what we can do about what you just described. And so as we work our way through this, why you need to be the banker in your life and what that means. So
So
here we go.
Nelson would remind us that you should be the CEO of two industries, and that is whatever industry that excites you, whatever your job is, and a banker. You should be both. Now, you don't have to be the CEO of a major corporation for that to still work. You could be a two employee or a government employee or even a business owner. All of those work, but that's that's a primary source of income, right? And banking.
And that takes us to
And so we move from that into the hidden cumulative interest that you pay now. So let's show you how you can handle that, how you can take control of that. So we talked about this. You finance everything you buy. There are no exceptions. You borrow from the bank, you pay them interest. If you use cash, you forfeit all of the earning power. And in infinite banking, we're talking about how you are the bank and you recapture the interest that you would normally pay to commercial lenders. So we're looking at that in the sense that if you recapture the banking function for your household automatically, without talking about interest rates, without talking about rates of return, automatically you are reclaiming 34.5% of your household expenses, because that's a number that Nelson would calculate when he calculated on average how much money leaves the household environment and leaves to go pay for the cost of interest. He calculated it at 34.5%. So all of those other rates, what you receive back on a rate of return, or whether or not you're paying 3% for a mortgage or 7%, all of those are just icing on the cake when you recapture the 34.5%. Would you agree with that?
100%, Jared. 100%. So why don't we tell people what happens when you become your own banker? I'll just cut through a few of these and you can give your commentary.
So guaranteed increases. So we're talking about two different, I guess, sides of the ledger in terms of what a policy provides. You have a guaranteed side and a non-guaranteed side. The guaranteed side is guaranteed to increase in cash value and death benefit every year that you continue to pay your premiums. So you've got a guaranteed increase. One of the other things that shows up here that we would, a term that we would use is uninterrupted compound growth,
Right.
where it is compounding on itself year over year. All you've done is raise the bar for the next year. They can't take that back and go, well, we're going to pull that back down, or we're going to back that down a little. Everything is continually increasing year over year. You don't have to worry about a down cycle where you lose 50% and have to start back over.
There's a part of this that I think is worth emphasizing too. It's we're using the money. So you take a policy loan out. Any place else in the world where you take money, you don't have access. That money is gone from that place. Within an IBC, the confines of an IBC contract or structured contract, that money never leaves your policy, never. It's just there's a collateralized lien against it.
That's
and
right.
so you're using this money actively, aggressively, as little or as much as you want, and it has no impact on the cash value because it's going to grow regardless of the usage of that collateralized lien, which are the monies that you pull from the collateralized lien against your cash values. Extremely powerful concept that it just does not apply anywhere else. CDs, the money comes out of a CD, a bank account, even out of some people use a HELOC. There's so many other considerations there to contend with. This is guaranteed, and then you can access this money. It's hugely powerful.
Yeah, I would say, the HELOC and the security-backed line of credit, those are kind of similar products in terms of, it's got a backing to it and you can borrow from it. And as you replenish it, you can borrow again, so there are some similar types of setups on there, but you lose a lot of control and there's other things you give up through that process that we think using a whole life of vanilla whole life product is a better choice than the other alternatives.
And maybe we could do a podcast just doing a comparison of each of those different credit facilities and show where the differences lie, and they're pretty significant.
Sure.
This is a big one. Nobody really talks about. It's not part of what we do, but it's embedded in there.
Sure.
About 70, we talked about this before, that 70% of the people who are on disability using a Medicare coverage, their long-term care benefits do not cover non-skilled services. And that's the lion's share of where that expense is. This is a place that you could go to fund those expenses if you needed it.
And
Quite
just for
important.
a point of clarity, it's not long-term care. We put it in there because it can be used as that, right? But it's basically access to a early portion of the death benefit. I guess we technically can't call it long-term care, but it is very similar to that in the sense that you're accessing your capital to pay for your care at any time in your years.
Yeah, a long-term care policy would be a separate policy.
That's right.
But this is a long-term care-esque benefit. It
Yep.
shares
Yep.
many of the properties, but it is not a long-term care policy. You're spot on there, Jared.
Yep. Yep. Just point of clarity there so we don't get ripped apart in the comments.
Yep. Fair enough. Can't lose money.
That's right.
You can't lose money. The insurance company's got to go belly up for you to lose money on this thing. So the probability of the highest hanging fruit out there going under when they've been around for over 100 years, paying a dividend on top of it for those 100+ years, is pretty remote. But no, if you pay your premium, you carry the policy. It's a private contract. Private contract between you and the insurance company. Your money is about as safe as it's going to get, unless you're going to throw it in precious metals in a vault.
Sure, that's right. Completely agree. And all your dividends are dividend gains are tax-free, again, up to basis, so up to the amount that you've put in, unless you cancel or lapse the policy. So excellent point here that the gains that are made are tax-free. We could get into the weeds real quick there and throw some numbers around, but I know we tend to lose folks when we do that. So I have no problem leaving that right where it is. I think that's a great point.
All right. Press on. Now, this is one shout out to the bankingtruths.com guys. I swiped one of their slides because I don't believe in reinventing the wheel. They did a nice job putting this together. But why don't you talk about this, Jared? The typical bank money flow versus IBC.
Yeah, I love this. This is such an awesome just graphic to show how this works. You could take that top picture that's got the blue stairs. You could use that also in the inverted fashion, right? You could put that below the line.
Yes.
But either of them are very similar, where at the end of the day, you end up back at zero. Because in this scenario, what they're showing as you walk up those steps is that you've saved, and then you spent. And you go right back to zero, and then you save. You might be gaining a couple of points of interest along that line there, but then it gets to a spot and you spend it. Same thing on the other. So it just is a repeating cycle. Save, and then spend. Again, you could do the opposite side of that black line, and you could go down below where you take debt and then pay off. Take debt, pay off. Again, both scenarios, you end up
Always
back at
working to zero. Yeah.
Always working to zero. Again,
Never get ahead.
And this is a very common type of an explanation or an understanding. But we're talking about some of the bigger purchases in life, right? We're talking about large appliances. We're talking about vehicles. We're talking about homes, potentially investments. There's a whole slew of things where folks would go to the bank to receive a loan. And this is a similar, whether you're the save and spend family, or you're the debt first, pay back. Generally speaking, at the end of the day, you're going to end up at zero regardless throughout this process. And who's taking all that money home? The good old bank. Anything that they're charging you in terms of the financing, or we talked about what it's like when you're saving up the cash and then spending. We've talked about both of those. So what we like on the bottom here is if you can set some perpetual motion, if you can get these whole life contracts up and running, and you can endure the upfront costs of starting a business, starting your own family bank, that if you can endure what that looks like, you have a perpetual tailwind. Doesn't get any more perfect than describing our name of our podcast, Creating Tailwinds. This is where this is from. The goal is set something up that is constantly creating financial tailwinds in your life. And this is the way you can do it. So as you're borrowing, as you're borrowing from your policy, you're using those funds while it's growing in the background. You know, the one thing that's missing here on the y-axis is showing time. Whether this is 1 year, 2 years, 10 years, or 30 years, it's irrelevant because what you're doing is constantly building these upward trajectory of how you can store your warehouse of wealth, just like we were talking about at the intro to this.
And the key to this whole thing is driving the dividend. The dividend is driving that line that we're seeing, that green dashed line that's going parabolic. And how do you get more dividend? The first and most important thing, our
Stay around
friends
longer.
up in
Stay around. That's how you
yes.
get more dividends. Have a policy that's mature for 30 years.
Yeah, but what does Jason Lowe always say? You know, what you say you got to do? Pay premium. That's it.
Pay premium. I love that.
Don't make this hard. You
That's
pay
right.
premium. That's going to drive the dividend. The dividend is going to drive that arc, and it's going to go parabolic on you. You got to get through the first few years. Yeah, you're not going to see significant shift in the cash values, but as this thing grows, man, oh man, it takes off.
That's right.
It just takes off. All right,
right.
so let me
So
transition.
that's the goal.
Yep, that's the goal. So let's talk through. This is very simple stuff. This is how it works. This is IBC in action in a nutshell. Jared, you want to take it?
This is all you.
Okay. All right.
I've been talking too much. I'm going to defer to you.
No,
I'm going to defer
you've
to the
been doing
expert.
a phenomenal job here. So you take your money and you're going to simply fund a IBC designed life insurance contract, and it's a dividend-paying whole life insurance contract from a mutual company is our preference by a long shot. And then once the money is sitting there, the cash values, you're going to have, we can build these things. Jared and I can build these things. So the lion's share of your premium is sitting there in cash value. Once it's sitting there in cash value, you can take the lion's share of that out as a loan, and that becomes a collateralized loan. It's a lien placed against your cash values. The cash never leaves your contract. It remains. And as you can see underneath, there's a little spigot, and you can turn that on or off, and you can use that money for any purpose you wish to, unrestricted. And that's a private transaction right now. That is not reportable to anyone, including the IRS, any government agency. This is a private contract between you and a private company. That's what this is. And then on your terms, and Jared and I would encourage you to do this in a disciplined way, you want to put the money back. So the loan repayment releases the lien on your cash values for your use again. So just to be clear, when you put money back into the policy by way of a loan repayment, you're saving on the loan interest, yes. You're still getting the dividend, but it is not increasing your dividend beyond that until you do what? You got to pay more premium. That's right. Is the
which
secret
you do
sauce
so typically at the annual renewal.
Yep, absolutely right.
Some folks like to pay monthly, quarterly, or semi-annually, but generally speaking, if you're an annual payer, when that renewal hits every year, you pay additional premium. It restarts and cycles the next year. They issue the dividend, and then the cycle continues. And I love this picture here. This is just a nice, easy description, of how this is set up. And I just want to come back and circle back at a term that you used that was so important. When we talk about setting up your own bank, you do borrow from the cash value of your life insurance contract. And just like you said here, the collateralized loan, that is an exact perfect description, but it's the cash value, right? Someone who's new to IBC, maybe they haven't read the book yet. It doesn't always make sense that they're not borrowing cash, but they're borrowing from their cash value of this contract. And the cash value is constantly increasing year over year. That's the part that's the uninterrupted compound growth. As long as you pay your premium the year over year, it is guaranteed to continue to grow and will do so like we've shown in that parabolic manner. And through that, you still get access to these collateralized loans that you can borrow your funds and put them to use in any way that you choose. Just like John said, this private transaction.
Oh, man.
So we launch into 2026 and we start off with a nice, simple message of the reminder that you finance everything. And the question is, are you controlling where you're saving? Are you controlling your warehouse of wealth in a place that you can recapture that interest and have absolute control over your warehouse of wealth?
Well said. Well said. Yeah. I mean, you got to put your money somewhere. Take a look
That's right.
take a look at where you're putting your money. I think, Jared, you and I would find that, and we do find that most people have very leaky buckets with their money. They dump it in there and it's going out in all directions. And in the digital age, gosh, we're spending money and we don't even know we're spending it. Those $5, $7, $12 charges that keep reoccurring on our bank statement, we've long forgot about them, and we're too busy to do an audit on our account. We're not going back. Hundreds and hundreds, in some cases, thousands of dollars that you could mine from just how you flow your money. And if you look at how much money you're keeping in your bank account, you're getting 0.02 nothing for that money. Why not put it in a place that you can access? You got full control over. It's a private transaction. It's not even looked at, or I should say it's protected from probate, which is important for people for their financial planning down the road. It's just such a powerful tool. Why not take a look? Why not take a look? Give Jared a call. Give John a call. We can help you with this stuff.
Love that. And if someone hasn't done so already and they're interested about learning more about this, obviously one of the first steps would be you can reach out to either of us through the website, get in touch with us. The website is flightpathfinancial.com. There's a contact us tab there. Or if you want to go do some research on your own, we recommend finding your local book retailer, whoever that is, and purchasing Becoming Your Own Banker by R. Nelson Nash, a quick 92-page read of describing how he stumbled into this process and yet how powerful of a tool that he discovered this to be. And it goes on from there. And there's a lot of different other resources than just that book, but that is by far number one, hands down, the stop where to first begin if you're unsure of whether or not this fits you or not.
And you can get that book at flightpathfinancial.com.
Also at our website.
Resources page. Yeah. It's there.
That's a good plug.
For your usage. And not only that, for those that know nothing about infinite banking, there's a very nice high-level review. Our first 10 podcasts on creating tailwinds, you and I walk through that book. Now,
that's right.
You need to read the book. I wouldn't just rely on the podcast. We do a pretty good job, I think.
Sure.
It's
you get the commentary. Maybe if you read the first half of the book, go through and check out 1 through 5 and kind of see the commentary. Maybe it would start some conversations that you'd like to have when you do reach out to us and talk further about what this looks like.
Yeah, that's well put. Well put.
Love it.
So,
well, awesome.
Well,
cheers
I want to make
a great
one shout
2026.
out.
Go right ahead.
One shout out to your wife, Ashley, for all the hard work that she's done on our digital stuff. So, Ashley, thank you from the bottom of our hearts for doing the work that she did for us. So
that's awesome.
Thank you.
She will very much appreciate that plug. I'll make sure she's tuning into this episode so she can hear the thanks.
I'll leave you to your work there, and look forward to the next one, Jared.
Thank you much. Have a great day, John. We'll talk to you soon.
You too, Jared. Thank you.
Cheers. Bye-bye.
We'd like to thank you for tuning in to today's episode of Creating Tailwinds podcast with your hosts, John and Jared. As always, we welcome your questions and critiques. You can reach us through the Contact Us tab at flightpathfinancial.com. Remember, it's all about how you think. As Nelson Nash has said about infinite banking, give it your close attention, and it can make a radical improvement in your financial future.